Hi, I'm Hannah Wallace and welcome to Finextra Unplugged. With me now, on the side of the road in Wales, the true meaning of working remotely is KNOX, CEO and founder of Tandem Bank. Hi Ricky, how are you?
Fantastic. Great to see you today.
It looks like it's lovely weather there as well. And as I say, the true meaning of working remotely, there you are. So we haven't seen you on Finextra TV for a few years now, but that doesn't mean we haven't been keeping an eye on Tandem and what you've been up to. So can you tell us, how have you been getting on up until now?
Yeah. No, Tandem's going on super. We sort of launched to the public at the beginning of 2018. And so we're now, 2 and a bit years in, about 1 million customers, and businesses doing extremely well. We've plowed a slightly different furrow from some of the other challenges, but it's working extremely well for us.
Mm-hmm. Well, we'll come on to that a bit more further on, but I want to talk a bit more about these strange, unprecedented times we find ourselves in as a result of the pandemic. And we're seeing lots of changes across the industry. One of which is the way people are valuing the money they've been saving, and quite rightly so. We've entered some really unusual and uncertain times with potential redundancies, furlough, pay cuts. So people are taking care of their money a bit more. But I'd love to hear your take on sort of your top tips on how people can make the most of their hard-earned cash.
Yeah, absolutely. Look, I think it definitely has been a challenging period. And I think what we're encouraging our customers to do, and this is something, to be honest, we've always helped with, but I think the conditions are sort of perfect for now. We've always talked about building up a safety buffer, making sure that you have a rainy day fund set aside, and we have various pots that you can put that money into. We have a function called auto savings, which is pretty central, which goes a step further than the roundups that you see with the other digital banks, and now starting to be copied by the mainstream banks. We have an AI algorithm that predicts your cash flow to the end of the month and figures out how much money you can set aside. And interestingly, since we've gone into lockdown, mine has roughly doubled in terms of how much it puts aside every week, because it sees that I'm not going to pubs or restaurants and spending that extra money. So actually, for people who haven't been made redundant, often they do actually have quite a bit of extra money right now, whether that's the cash they were spending on traveling to work, restaurants, pubs, the coffees they're not sneaking out 4 or 5 times a day. So there's really a fantastic opportunity to put that money aside. And if you use the Tandem app, that all happens automatically. You don't need to figure out how much you're spending on coffee. The app does that for you and puts that extra money aside.
That's interesting. All right. And I hear you've been working on something that's called personal plans for those who've been financially impacted by COVID-19. Can you tell us a bit more about that?
Yeah, sure. So, I mean, obviously the industry in general has been looking at 3-month payment holidays on both mortgage products as well as unsecured products. But our view is that customers are in very different circumstances at the moment. And so we're offering forbearance to anybody who wants it. So, but we've actually been discussing the customer situation with them. It's our belief that during a time like this, you shouldn't actually be just ceasing all your payments. And what many other providers are doing is both ceasing the payments and still accruing interest on your overall loan, which is sort of double bad, because actually what's going to happen is you've got a lot more to pay back in the future. So we're encouraging customers, and indeed, if they are willing to continue to make a small payment every month, and often that's even 20p or a pound or whatever suits their circumstances, we've actually cancelled all the interest on their cards. So they won't be paying any additional interest during this tough period. And we're letting them off that cash. So when they come back to being able to pay, their loan is actually going to be slightly smaller, depending on how much their payments were, than it was before the crisis.
Well, that's Tandem, but looking at a sort of credit in a sort of broader sense, how do you think our relationship with credit, and how do you think it will be impacted going forward as a result of the pandemic?
Yeah, it's an interesting one, because at a national level, the government's been stuffing credit down everybody's throats for about the last 3 months. They're really encouraging the banks to lend more, particularly to SMEs, to keep things going. In fact, the amount of credit that's been extended in the UK economy, even in Q1 before we got to the pandemic was about 3 billion, which is actually the highest quarterly credit extension that we've seen. And now we've got, we had 4 billion in the first few weeks. I think we're at 27 billion now on these CBIL schemes. I mean, these are unprecedented numbers. Now, I think for individuals, there is credit is definitely on one hand an opportunity to manage cash flows, etc. But also, if for some, and I think particularly in the younger generation, seen as a bit of an evil. And I think that comes from, a generation that grew up in the financial crisis when they saw their parents perhaps struggling with money or debts during that period. And so there's definitely a much more negative attitude to credit. Now, that's something that we've been thinking a lot about. And what we've been trying to work on at Tandem is figuring out how we can get away from the unhealthy paradigms that we have at the moment. For example, an overdraft, which ultimately lets you go into credit at the end of the month. It sort of seems quite convenient, but if you're actually spending more than you're than you're actually earning, then you're going to hit the bottom, and you're actually going to hit the bottom slightly earlier each month. And whether that bottom is here because it's the zero on your account or minus 5,000, the only difference is actually you'll be paying interest on that extra 5,000, and you'll be getting yourself into more and more debt. So one of the things we're working through, and because we're working on a current account proposition at the moment, is how we can build credit mechanisms in there that actually aren't regressive, don't sort of gradually push you into a tougher situation.
Sure.
And whether that's even through time shifting of individual bills or payments, or indeed salary on a temporary basis, that basically can help people manage through some tougher times. Because the way credit is useful is, let's say Christmas is a spending month, and so you want to spend a bit more and get nice presents for your family, but you're going to pay it back over January, February, or indeed you're going to save for it in September, October. And those two mechanisms, like enabling both the saving and the credit to be flexible but temporary and allow you to smooth cash flow through the month, through the year, is something that we're quite excited about finding that new paradigm, and actually not really calling it credit as such, because it's more about making sure the money's there at the right time for your cash flow.
No, I think it's interesting that you've taken into account the changing psychology towards credit cards, which I know that you decided to call your credit card the travel cashback card, which is proof that the term credit card might be a bit of a turn off. All right, well, moving on from that then, Finextra just the other day actually released a story on how challenger banks beat incumbents on the account opening experience. Can you tell us why, rather than going into the story?
Yeah, I mean, there's a pretty simple one, which is actually the time it takes to open a bank account is, literally can be 30 or 40 days with a traditional bank. And for challenger banks, for our journey, for an average, person going through about 4 minutes. So, and actually varies a little bit both sides of that. But you're getting to the point where, and this is where you see slightly different behavior as well. And I think, which is people opening a second account, starting off with trial behavior. Because previously you would never trial a bank because it involves pulling out your teeth and all of your hair through a 3-week process, which is incredibly intrusive and is more like sort of Hunger Games than actually somebody selling you a product. It's slightly astonishing because actually I was recently setting up a small business bank account. Always have a number of ventures that I'm working on, and the time it took us to open a business bank account, it was about I think it was about 6 weeks in the end. And I had to make 4 personal visits between 9 and 5 during work hours to a bank, in person to go and open. I mean, it was literally absurd, the process that they're putting people through. And so, there is such a gulf. And if anything, it's actually getting harder to open a bank account with traditional banks because the AML restrictions are getting tighter and they haven't digitized. So they need more and more documents. So it really is, it is a major advantage. And it's one of the reasons why there are millions of customers, using these challenger banks. And what you're seeing when you look at the underlying data is that actually people are putting more and more of their spend onto these new platforms. And so while the old banks may theoretically have the salary package, which they do in many cases, people are now transferring almost their entire salary over to their neobank account and spending the majority of their money over there. So the balances are rising on average, pretty much month on month in a straight line, and the spend is rising.
All right, looking at Tandem's position then, are you behind the likes of Monzo and Starling for any reason, or is it because you're more focused on a more niche set of customers?
So first thing to say is, behind the head, these are interesting words to use in the sort of game of startup and business. We have less customers than Starling and Monzo. However, we I haven't seen the latest figures, but probably have more revenue than Starling or Monzo. We certainly did at the last time you could compare audited accounts. So Tandem has not taken the sort of mass market, debit card entry strategy that some of its competitors have, and indeed has tried hard to focus on customers who both we can help, but also who can be profitable for the bank. So one of the things that people don't talk a lot about is that within banking, there are some customers who lose banks a lot of money, mostly the guys who don't pay them back. Then there's a middle set of customers who hardly make them anything, hardly lose them anything, who ultimately are sort of financial optimizers, etc., are in that category. And then obviously there's a very small group of customers making loads and loads of money, who are the sort of the wealth management customers who have, millions and billions in the bank. But there's a large chunk of customers who are quite profitable, but to the tune of, tens of pounds a year, not hundreds of pounds a year, who ultimately are, have financial challenges. They haven't got a ridiculous amount of money, so that they never bump into financial money challenges and worries. So they've got problems that we can solve. And it's those customers that we focus on. So that's not the 16 to 18-year-old market, which both Starling and Monzo have a proposition for. That is our age demographic is older, more in their 30s and 40s. And we think that our proposition is much more compelling for them. It's built rather than on simple convenience, on some of the slightly more complex forecasting and understanding the exact ins and outs of your cash flows, using some of the AI models and things that sit in the background, and providing quite a bit more value in terms of actually improving your financial situation, your financial health at the end of the month. We measure that for customers and monitor it as one of our key KPIs, and we can see whether people's minimum balance is gradually increasing, and whether they seem to be getting more stressed or less stressed. And even in COVID, what we're seeing right now across our customer base is people are actually getting into a better financial position over time, on average, across the Tandem base than they were previously.
Sure. Well, I know this is one question that you've been asked multiple times. I've seen you up at stage at, Money 2020, Cybos and other events like that, being asked the questions, will challenger banks be the winners? But I think you touched on it there. I want to ask that question in the context of the pandemic. What does the future look like here?
Well, look, I mean, there's two bits to that. There's a huge macro thing, which is, this has massively accelerated the shift to digital. I mean, if we didn't have the pandemic, I probably wouldn't be standing in a lay-by. I would be in your studio in the comfort of a proper recording setup. No, but more seriously, the shift to digital is probably been accelerated by 5 to 10 years by this. There are people My parents, for example, who really wouldn't have got round ever in their lifetime to downloading their bank app, which have now downloaded their bank app, or even, and then are finding, trialing out, well, in my parents' case, the Tandem app, of course, and finding that is actually a much easier way to interact with their money. So it's pushed people of all demographics into a more proficient, more digital way of doing things. And I think that trend isn't going to be reversed after COVID. Well, I wouldn't say goes away, but after we have a medical solution for COVID. So I think there has been a permanent shift, which is going to move in the direction of the digital players. I do think there will be some challenges. So, one of the things, which we've talked about before, Tandem is very keen on moving towards a profitable position. We're very close to that, and we actually think that having a sustainable business in these tougher economic times is definitely going to be much more important for everyone here. The flow of very cheap capital that we saw in the last 5 years, I won't say it stopped, because it hasn't. There's still a lot of capital out there, but I think it's definitely slowed down. People are looking to value. People want to actually back a business which is going to survive. So I do think there will be, in the very much broader digital banking set, and people use that to refer to a lot of non-banks that have debit cards, for example. I think there will be consolidation. I think we will see during this period some of those players either go under or be bought by other players. I think that's a little bit different for the guys who are already banks. So the Monzo, Starling, Tandem, Atom, as a group, we obviously have very significant regulatory capital reserves and a number of other things that we're obliged to hold as a new bank. So we're more stable anyway, and actually but also the value that's been created within those businesses is pretty significant. And while some of them are further away from sustainability than others, I would say that all of them will come out as winners from the crisis.
Sure. Yeah, I think you make a good point there about sustainability being at the top of the agenda. Now, I don't want you to stay on the side of the road for too long, so we'll leave it there. But Ricky, it was great speaking with you, and you've definitely won the prize for best location for a video call today. So thanks very much, and I'll let you get back.
Thanks, guys. Really, real pleasure to talk to you.